The jobs report was not a big deal this morning, and as a result, the market can't decide which way to go. It's tending green, but not in a big way either way. So we'll talk more about all of those details in a minute. So help me out. I talked about this last night. I'm going to repeat it because I think it's really, really important. Can you explain to me why Tesla is the only stock on the S&P with a PE of 100? Only about 15 have PEs above 75. Well, here's the reason. I'm going to explain it to you. Tesla's value is Elon Musk. That's what we're paying for. More specifically, we're paying for his vision of a world where vehicle transportation is automated and labor is done by robots. NVIDIA is the darling of Wall Street, and its PE is only 40. When Elon does political things or acts weird, it might impact a small amount of future sales of this or that product. It isn't even clear that that is true, but it doesn't change the reality that Tesla will be multiples of Tesla. I mean, will be multiples of Apple very soon. And that's what we are invested in. And all of it is due to that weird guy that has been red pilled. Sawyer Merritt has this morning. He says Wedbush analyst Dan Ives has added Tesla to his best ideas list. That's two in a week. Top analysts adding Tesla to the best ideas list. And he's reiterated an outperform rating and a $550 price target. Dan says this. He says there's been a number of times in the Tesla story over the past decade that negative sentiment, no kidding, a few times, and street worries have overblown the narrative of this uniquely disruptive global tech story. From the white knuckle production moments of 2017 to 2018 to financing worries to the Musk Twitter soap opera in 2022. And here we go again. Tesla bulls find themselves with their back against the wall, facing global negative sentiment around the Musk Doge and the Trump administration. This is the gut check moment for the Tesla bulls, including ourselves, after this massive sell-off in Tesla shares with fears mounting. The bears own the Tesla narrative in the near term as the lackluster sales numbers from Europe, China, and the US in January, February, along with Musk's protests and brand worry, the Musk protests and the brand worries have created many concerns. But this is just the beginning of the biggest innovation and technological cycle in Tesla's history ahead coming in the next few years. First, we expect a lower cost sub $35,000 new model before this summer that will drive pent up EV consumer demand globally and get Tesla back on the growth track and heading toward the 2 million run rate delivery trajectory. It'll be way more than 2 million. Dan Ives, you're a little bit of a bear on that one. The launching of unsupervised FSD in Austin, Texas this June kicks off the autonomous era at Tesla, and we value that at $1 trillion alone on a sum of the parts valuation. Autonomous will be the biggest transformation to the auto industry in modern day history. And in our view, Tesla will own the autonomous market in the US and globally. We believe autonomous and Optimus will represent 90% of the valuation of the Tesla story and create a company with a valuation that exceeds 2 trillion. You realize, of course, that 2 trillion, we'd be talking about $600 a share, something like that. Says, but then he goes on to say, let's address the elephant in the room, Musk and Doge. While the Doge-Trump-Musk ironclad partnership has created major brand worries for Tesla, we estimate that less than 5% of Tesla sales globally are at risk from these issues, despite the global draconian narrative for Musk. Importantly, we expect Musk will better balance his time between Doge and Tesla SpaceX over the course of 2025, and some of these distraction issues will fade. We continue to believe the best thing that ever happened to Musk and Tesla was having Trump in the White House, and this will create a deregulatory environment with the federal autonomous roadmap central to the Tesla golden strategic vision. Okay, then we have this from investing.com. 𝐒𝐚𝐭𝐮, I think, upgraded its rating on electrical vehicle maker Tesla and hiked its price target sharply, with the investment bank stating that it had transferred coverage of the stock internally. TD upgraded Tesla to a buy from a hold while raising its price target on the stock from 180 to 388, representing the upside of 47% from Tesla's Thursday close. See, 388, yeah, 388. Okay, well, that'd be a good price. It's going way higher than that, of course. The investment bank said while the stock was still facing a slew of challenges, its prospects in EVs, autonomous vehicles, and robotics tilted the risk-reward ratio favorably for Tesla, especially after recent losses in valuation. TD still sees a challenge in the first quarter for Tesla, but expects an improvement in the later quarters. The EV maker is also less exposed to tariff risks, obviously, according to TD. TD's base case is that Tesla will log mid-teens delivery growth in 2025 and 2026. Mid-teens in 2025 and 26. That's wild. Along with improved margins. The investment bank said it did not account for any developments in self-driving and robotics in its base case. The upside scenario for Tesla is the successful deployment of the self-driving ambitions, the introduction of the new autonomous vehicles, momentum in its robotics product Optimus, as well as a resurgence in sales of the new EV launches. But TD noted that trade tariffs under President Donald Trump will still remain a risk, as did the potential repeal of the Biden-era Inflation Reduction Act, which offers the subsidies of $7,500. A miss in Tesla's self-driving deliverables also provides a potential downside risk. I agree with that. If they don't deliver in June, July, August, if it drags on, that is a potential downside risk. I still think we'll be at 700 by the end of the year. Tesla lost nearly a third of its valuation so far in 2025 as weak deliveries caused by the Model Y changeover. They don't bother to say. Doubts over its self-driving ambitions and a growing concerns about Elon Musk hit the stock. The company has pivoted heavily into autonomous vehicles, artificial intelligence, robotics to help offset weakened deliveries. That's a ridiculous statement. A mix of heavy Chinese competition and softening global autonomous demand saw Tesla log its first annual decline in deliveries in 2024. Speaking of Chinese deliveries, this from Tesla Chan. According to the latest report, since new Model Y's pre-orders in China began, each store in Beijing has received about 100 new orders every day until today. There's a nationwide data showing that the new Model Y has accumulated 200,000 orders in China. The phrase deposit refundable disappeared after shipping began on February 26. And a Tesla China official said one of Tesla's key goals in the Chinese market this year is to launch Cybertruck in China. I guess made here. I will see what happens. AJ says this. He says, think about it this way. The whole of Europe, including the United Kingdom, accounts for only 17% of Tesla's sales in the fourth quarter of last year. Let's assume a massive negative 10% demand impact, which I believe is much lower. The impact on global sales is 1.7%, and therefore barely a needle mover. Sawyer Merritt has this. He says, news, Tesla's AI chat box now uses vehicle data for personalized responses. You can ask questions such as, what alerts were recently triggered on my vehicle? Or is my tire pressure low? Can we ask, I wonder if we could ask, why is my tire pressure low? Or could we ask, how do I find this on my screen? Those would be good things. Squawk Square. I don't usually quote Squawk Square. I think Squawk Square is probably a very good investor. I don't know how he does overall. He only talks about his day trading. But he never talks about like, okay, how has he done versus the S&P or whatever. And I don't like a lot of his analysis, but this particular one caught me. He says, we need the market to go down around another 1,100 points on the Dow, 700 on the NASDAQ, 150 on the S&P to get the capitulation we need. Tesla looking like 250 today, but a good flush to 240 to 245 would even be healthier for a short-term bounce. I think, again, I've pointed out we might go to 220. I mean, I would be perfectly happy with the markets to give a complete bear, go to 20% off for the S&P, go to 30% off for the NASDAQ, and for Tesla to end up at around 220. And then we would just be going straight up from there. That'd be a great buying point. This buying point has been mentioned by several, the 220 level. I think, I'm not going to say because I'm putting, never mind. I won't even say it. I was going to say Bradford Ferguson, I believe, is thinking about 240, 220 as the place where he might get in, but he never said that to me. I'm completely just trying to divine it. Okay. Mario Nuffel, Tesla dealership was shot up in Oregon. This is the second time a Tesla dealership has been attacked in Oregon. What is going on with those Oregonians? The FBI has now joined the investigation. Police and FBI are investigating after gunshots shattered windows and hit vehicles at a Tesla dealership in Tigard, Oregon, around 1:46 a.m. last night. By the way, this is Randy Kirk. Hit the like and the subscribe and all that jazz. Patreon, you just go on down and you push the little and you hit and then it'll take you right over to Patreon, and $3 a month. Some of you could afford it. I know that. I bet there's a few of you who could probably handle $3 a month or $5 a month or $10 a month. Remember now, if you come in at the $5 or $10 level, you get free audiobooks. Don't forget to ask, because I'm not going to remember to remind you. All right. Rumor this morning. The son of Walkie has this rumor out. Microsoft has reportedly begun testing xAI's Grok as a potential open AI replacement in Copilot. Would that be wild? Holy mackerel. Total non-farm payroll employment rose by 151,000 in February versus the 170,000 expected, and the unemployment rate changed little at 4.1%, according to the U.S. Bureau of Labor Statistics earlier today. Employment trended up in healthcare, financial activities, transportation, warehousing, and social assistance. Now listen to this one. Federal government employment dropped by 10,000 units. So this is just the beginning. This is what I said yesterday. We weren't going to be really seeing it yet. We're going to start seeing it next month. This is when you'll see the big drop in federal government employment. And very likely you're going to see either, we might be looking at next month, maybe 50,000 increase in employment overall, maybe flat, because it's going to be 100,000 government employees that will no longer be working for the Fed. In February, average hourly earnings for all employees on private non-farm payrolls rose by 10 cents or 0.3%. This is better. This is closer to what the Fed would want. Average hourly earnings were 4% over the last year. That is still too high. 3% would be better for the overall. And then in February, average hourly earnings of private sector production and non-supervisory employees, same thing, 0.3%. So just a little high. From the Wall Street Apes on X, Representative Tim Burchett, a Republican out of Tennessee, says he's willing to lose his job to tell the real reason the government officials are opposing Elon Musk and Doge, and what's going to really be the problem, I guess, in terms of getting as much through as Elon would like to get through, and the president. They're going to push back because you've got a lot of congressmen on both sides of the aisles. If you follow the paper trail, it's going to come back to them. You've got their wife and or their girlfriend that works for some agency, quasi-agency, or some business that gets their bucks from the government. This town's as crooked as a dog's leg. He says, I'm going to get primaried for saying this, but that's the truth, and I know it. Somebody's going to straighten it out. It looks like it's going to be Elon Musk. So this morning, Secretary of the Treasurer Bessent agrees with me, says we could see some softness in the economy for a while. He's quoted this way: the market and the economy have become hooked, addicted to excessive government spending, and there's going to be a detox period. And Chairman Powell will be speaking later today. That could be a very bad thing for the markets. Speaking of those markets, where are they now? Let's go take a quick look here. So Tesla has been up, Tesla has been down, Tesla has been up, and Tesla has been down. It's been all around the zero mark today. It is currently down 0.47%, with the Dow Jones down 0.04, which has also been all around zero. NASDAQ, all three, everybody's up and down around zero today. NASDAQ is up 0.09. S&P is down 0.02. So you can see everything is very, very close to the break-even line. Apple is up a little bit. The rest of the Magnificent Seven is mixed, with NVIDIA up a little bit, just exactly. And again, 100% red, green, red, green, red, green on the Cathie Wood stocks this morning. Now, one of the reasons why I think there's so much activity around the middle of the line is, of course, because of bonds. And the bonds were, they started out they did great. They were down, I think, maybe 4 or more percent, but they've come back a little bit. So still down 2.7 basis points on the 10-year at 4.255. We really needed to go under 4.25 again and start heading back towards 4. So very sad this morning to have to report that. The 2-year down 2.3%. I mean, 2.3 basis points, and the 2-month up 0.5 of a basis point. So anyway, that is why you're seeing this up and down, is the bonds were doing great, and then they kind of backed off. So I think everybody's seeing this jobs report, as I reported it earlier. It's really a nothing burger, but the truth is, if anybody's really paying attention, it is going to be a big deal next month. I mean, it's really going to be a big deal next month. All right, oil. Turns out that the Saudis this morning said, well, maybe we won't increase production in April after all, but they haven't made a final decision. So as a result of that, oil jumped up this morning. It is up $1.66, still only, that puts us at 68, but going in the wrong direction for my goal, or my stated estimate prediction that we would be in the 50s, maybe by the end of this week. I don't think, since it's Friday, I think I'm going to be off. So 68. Brent also up $1.75. Natural gas down 2% at 4219. Gold headed for a nice gain this week. It's up 950 at 2936, taking another run at 3,000. Silver at $33.10. Down a little bit this morning, 0.73 down. And copper is down this morning, 0.68%. But again, sitting at a very high level there, 477. The dollar is going to end up in soft territory, as it has been recently. And Bitcoin is up only 206 this morning at 89,234. All right. That gives you all of the information that I like to share with you on a daily basis. Last night was CERN Basher. And of course, CERN did a phenomenal job. Multiple people saying in the comments that they like CERN best. Oh yeah, but other people like Bradford Ferguson best, and other people like Nicholas Gibbs best, and other people like Brian Wong best, and other people like Larry Goldberg best. Those are just some of the people that I bring you. And this weekend, I'll have some Phil Beisel coming up as well. You like him. I know you like Phil Beisel. Anyway, we're going to hopefully start with Brian Wong being the new community expert on Optimus Robot. That's the new goal. He and I are going to try to really make sure that we're bringing you the very most up-to-date information about Optimus, but also about the competitors out there, about the nature of the overall industry, and where we see the trends are going. Okay, and then what else can I tell you? Oh yes, this morning, or today, being Friday, Larry Goldberg, yes, at around 4 o'clock, somewhere around there. I think Brian Wong tonight at 7:45. That one's still a little unclear. Tomorrow night will be Larry and I doing what? What are we going to do tomorrow? Oh yeah, Employment Saturday. Well, Cathie Wood calls it Employment Friday, and what we do, Larry and I, is we take a look at what Cathie does, and we analyze what she analyzed. I know it seems crazy, but I think Larry and I add a tremendous amount of additional nuance, information, color to what Kathy does. And it's one of the best, one of the highest ranking shows every single month. So that's tomorrow night. Phil Basel, I think, will be he'll either be Sunday morning or tomorrow morning. I'm not sure. Anyway, it's a little mixed up right now as I try to organize some of these folks. All right, go back to Tesla and see where it is now. Down 1.52%. That is $4 at 259. It really, really, really doesn't want to go under 260. We're going to see whether it breaks under 260, gets down. It would have to close like 255 or something to actually break that resistance level. But we'll see what happens. And with that, it has been great talking to you.